This is Markets Today, and I'm your host, Mbithe Mwema. It is still the first week of February, and over the last couple of weeks, we have been speaking to different brokerage houses, different investment banks to get a thesis or a sense of what they think will happen in the year 2021. Today, notwithstanding, we are speaking to EFG armors to understand what are their views when it comes to Kenya, but more importantly, how does Kenya position or rather look like compared to its global as well as sub-Saharan peers. EFG Armors has published its outlook for 2021 titled, Is the Recovery in the Price? This particular report is expecting, or rather saying that the markets are already pricing in a recovery in the upcoming year. Where is Kenya placed, and what does this mean for people who are investing in this country? Is it a time to buy? Is it a time to sell? But more importantly, how does Kenya compare to her peers? Joining us virtually from Egypt is Venita Kotedia, who is a sub-Saharan Africa analyst. She will be taking us through her thoughts when it comes to Kenya, as well as looking at the outlook for equities. Venita, a very warm welcome to our show this day.
Hi, good morning, Bithe. Thanks for inviting me.
Fantastic. I want you to start us off with the overview. When your company, when EFG Armors says that the recovery is in the price and looks at different markets and says that the prices, the investors already pricing in our recovery in 2021, could you please elaborate this by giving us an overview of what is happening on global equities and then also an overview of what is happening to Kenyan equities? Over to you, Venita.
Thanks, Bithe. So I guess sort of just starting right from the top, frontier markets are facing a more challenging environment. We think that there's heavy redemption pressure. The heavy redemption pressure of 2018-2020 is largely over. And we note that some of the funds appear to be seeing incremental inflows. Valuations overall are generally attractive despite rebounds from 2020 lows. However, the precedent suggests that we will not see a recovery in inflows into the FM dedicated funds until the recovery in emerging markets is well established. This, I guess I'd reiterate, would take several years. Moreover, FM dedicated funds are shifting to broader benchmarks that include small EM countries. So the mainstream FM countries such as Nigeria and Kenya may see less of a bid when FM flows do recover. So I guess like I mentioned, or like the title of the report suggests, 2020 will clearly be a year of recovery. So for EM and FEM, the key factors will be how local investors behave as conditions normalize, and how quickly key economic linkages to developing countries such as tourism, trade, remittances, FDI, how all of these factors basically recover. Overall, in the longer run, we see that there is a significant variance in growth prospects because of high debt levels in some of these frontier countries and low export growth as well. So looking further out, the way we sort of have analyzed the frontier and emerging markets economies is through a couple of parameters. So there are a bunch of economic as well as strategic drivers. So if you look at the fiscal stimuluses in some of these countries, if you look at export growth as well, we're basically looking at these as the factors which will drive growth in the long term and basically determine how flows are going to be varying into some of these frontier and emerging markets.
All right. Thank you so much for that overview, Venita. So you are saying that 2021 is certainly a year of recovery, but then you expect much less inflows coming into the frontier markets, which is what you referred to as FEM, and that more specifically is Kenya and Nigeria. Now, when we drill into sub-Saharan Africa countries, Venita, most of the investors, at least the foreign investors, tend to have an appetite for equities in Nigeria and in Kenya. From where you sit, has the investment sentiment changed, and are investors preferring Kenya over Nigeria or vice versa? And what could this possibly look like with regards to a general direction on inflows? Over to you, Venita.
Thanks, Bithe. So I think in regards to comparing Kenya and Nigeria, there certain level of, I mean, there's a couple of things you need to look at. There is positioning, so where local and foreigners are positioned. For Nigeria, for instance, positioning is very strong, but there are a couple of challenges. So the regulatory risks are very high in Nigeria. The policy framework is also not sort of aligned at the moment. And there's a lot of macroeconomic challenges that are sort of, creating a lot of backlog, and not backlog, but basically just creating a sort of a risk environment. So the upside risks in Nigeria are fairly high, despite the fact that real interest rates in Nigeria remain really low. Kenya, on the other hand, last year basically saw a lot of foreign sell-offs. So particularly towards the tail end of the year, we saw that, foreigners were sort of selling off, which sort of puts them in a pretty good position in 2021 to be sort of coming back into the market. So at the moment, if you look at Kenya, we've got a couple of, good things. One is the fact that we've got high earnings growth in the key sectors. So if you look at the banks, if you look at Safaricom, there's pretty strong earnings recovery on that end. If you look at Safaricom, for instance, as well, we're seeing that, after the transaction fees sort of waived off and returned again post the COVID sort of settling down, we're seeing that Safaricom is going to be sort of also experiencing forecasted earnings growth is about 20% for 2021 and 2022. So in those, in regards to those things, we're seeing that, Kenya might be sort of well placed in terms of, earnings and valuations, but then we've got a couple of things that may sort of prevent a very strong rally. And these things include, one of the key factors is a political overhang. So, with the election, coming into play in 2022, we're sort of seeing that investors might sort of hold off, particularly foreign investors. And we may see that, we might not see a very robust rally in 2021, despite these positives and despite the strong earnings growth as well. Over the course of the year, I think a couple of other things. Locals are also very well positioned to be sort of investing more in the equity market, but I think they've sort of held off in the past because of high yields on the fixed income side. We're not expecting to see the yields sort of come off in 2021, given the fact that, the government's fiscal pressures are sort of increasing. And over the next couple of months, we're going to see that we are going to have budget constraints, and the country is sort of looking to borrow from the IMF as well. They are currently having ongoing discussions to facilitate an extended fund facility. So if this sort of comes through, then the fiscal side will sort of be better managed. But overall, our sentiment is that the fact that political overhang, the factors driven by a political overhang, as well as these real interest rates sort of remaining fairly high, will sort of prevent a strong rally in Kenya.
Okay, thank you once again for that overview. So you're saying Kenya does look slightly better than Nigeria from an investor perspective, but then there are a couple of negatives that could actually reduce the attractiveness of this country. Thank you so much for that, because really the key issue is the political overhang as we are going into a referendum and an upcoming election in the next year. And I think the other key issue that comes to the fore is the element of a debt and the sustainability of debt. Now, Vinita, when we look locally, the local fund managers are actually preferring to place their funds with the government of Kenya. I think the last infrastructure bond that came in, that was a 16-year paper. People were getting a return of 12.2%. when you are giving us an overview of equities, yes, last year was a good year, but this year and the subsequent year might not be as good. Could this explain why then we are seeing not too much interest from the local investors and seeing more interest from the foreign investors? Would you have a sense of how then investors can play the possible risk of debt around Kenya and the sustainability of debt, and whether there will be inflows, especially from the local investors, from your own analysis? Over to you, Vinita.
Thanks, Bithe. That's an interesting question. So I guess you're right that in the last year or so, we have seen that the local investors have sort of positioned themselves more towards the fixed income side. So if you look at the most recent equity allocations published by the Zamara Pension Fund, equity allocations remain at their 10-year low at around 18%. I think there are a couple of factors. Number one is the equity market has not seen any new listings, the local equity market. So there's sort of like, a small pool of stocks to sort of, invest in. So if you look at the banks as well as Safaricom, you look at the consumers like ABL. So I think the lack of, new listings and dynamic stocks within the stock market have sort of, I guess, limited the play in the equity market, because all the funds are sort of just, sort of pooling towards just one set of stocks. So I guess that's sort of one factor that may sort of determine how things are going to change. So if there are no new listings in the coming year, we might see that the activity might change as well. But in the near term, I guess there is limited outlook on how the locals sort of might position themselves, because like I mentioned in the previous discussion, local yields are expected to remain high. I'm not expecting to see them sort of going down in the coming months, particularly due to the fiscal pressures that the government has. And these are not going to vanish anytime soon. Public debt to GDP levels are over 60%, and these sort of need to be balanced with domestic as well as external borrowing. So the fact that the Treasury is, I guess one positive point is that the National Treasury is going to be sort of diverting its debt uptake to the external side and borrowing more from the concessional. So like I mentioned, there's the EFF facility that they're basically trying to sort of gain from the IMF, and sort of budget support from the World Bank. So this will sort of reduce the pressures on the domestic debt market, but not to a large extent. So I guess the pressures are still going to remain, and this is something that we need to be wary of. On the foreigner side, I guess something we need to be aware of is the global flow pattern, and this is something you sort of asked earlier on. So if you look at active versus passive flows, we have seen that Kenya is a market that has sort of is guided by active flows, particularly from foreign funds. So in the coming year, if the foreigners are a little bit more comfortable with, the political environment, if they're more comfortable with the macro environment, our view is that we're not going to be seeing, very big, currency risks, despite the fact that the Kenyan shilling has depreciated in 2020 by about, circa 10%. So I think these factors will sort of determine how the foreigners place themselves in Kenya.
Okay.
Last year, there was the Kuwait upgrade. So the Kuwait basically moved from emerging, was upgraded from the frontier to the MSCI. And as a result of that, we are seeing that, a lot of flows will sort of make their way into Kenya as well as Nigeria. So this is something to sort of factor in mind. And overall, I mean, the USD weakening as well as, inflation sort of remaining high in the global environment is sort of also going to keep, I think, these flows sort of diverted towards FEM markets. So that's something sort of we can also keep in mind for Kenya.
All right. Thank you so much for that, Vinita. I want us to get into a brief when we're looking at the overview of the macroeconomy in Kenya. What is your outlook on some of the key parameters? Interest rates, and we've already talked about that slightly, but you can give us an overview. Interest rate, your views on inflation, and your views on currency, at least the direction, or if you have any target touch points for the end of the year. Back to you, Vinita.
Sure. So I'll start off with inflation because this is something we're not particularly concerned about for the first half of 2020. Inflation has remained fairly benign for most part of 2020. And the key things sort of, that we look at are, how well is the agricultural sector performing? Are there any risks? And we had a chat with the FAO on the locust situation in Kenya recently. And it seems like, even though the locust swarms are increasing, the situation is well managed and capacity levels on the ground remain very high. So I guess in a nutshell, we're not very concerned about the inflation environment. It will sort of oscillate around the target range of 5 and 7.5%. And I think we're expecting to see that, until oil prices recover, we're not expecting to see core inflation sort of rise as well. So those are, I guess that's the view on inflation. If you look at the Kenyan shilling, we did see a depreciation, like I mentioned, of about circa 10% last year. This year, I think our view is that we will see fluctuations on the Kenyan shilling, but a couple of factors. I mean, we're not particularly, worried about big shocks. Given the fact that FX reserves remain fairly stable at around above 4 months of import cover. Given that, also bearing that in mind, remittances are also playing a very strong role in keeping these inflows up. There is a good forecast for our exports as well. The central bank governor also mentioned that, our pipeline for horticultural exports and flower exports remains great. So over the next couple of months, we're expecting those inflows to remain stable. And I guess on the interest rate side, we are expecting interest rates to remain fairly sticky. Based on the Monetary Policy Committee meeting of January, we saw that the central bank basically held their rate steady. And we're expecting, that sort of an environment in the first quarter. So not much adjustment on the yields end. And I guess I'd like to reiterate that, the government pressures remain, on fiscal side remain high. So yields will remain sticky.
Okay, fantastic. Thank you so much for that overview. Now, I think we can begin to delve into the crux of this conversation, which is then, what does all of this mean for Kenyan equities? You are saying that there are a couple of risk factors, but certainly the positioning is better compared to its peers. Now, when we get into the different sectors, Safaricom, the telecom sector, has certainly dominated activity. It is now 60% of the investable universe when it comes to the Nairobi Securities Exchange. What are your views on Safaricom as a house, and possibly what are your other top picks when you are looking across the different industries? Which industries will do well, which will not do well? Over to you, Vinita.
Sure. So starting off with your question on Safaricom, our house view is that earnings will be under some temporary pressure due to specific relief measures as a result of COVID-19. So by this, I mean the waiving of fees on certain M-Pesa transactions. However, it remains well positioned as data and digital financial services adoption accelerates. And its strong balance sheet and sustained capex should drive a sustainable earnings recovery in 2021. So I guess our view on Safaricom in 2021 is neutral. We have on the bank's end, Equity Bank actually makes it to our top 15 frontier and emerging markets list, because we're expecting a swift rebound in earnings, an EPS growth of about 123.9% year on year, driven by normalization of risk charge and a rebound in NIMs, as well as the net interest revenue as well. there is a potential, I mean, there's potential news of a resumption of dividend repayments as well. And this should act as strong catalysts for an upward recovery for Equity Bank. I guess other stocks within our Kenyan coverage include EABL. Our rating on that is neutral. This is purely due to the fact that results have recently improved. However, it will take time to return to a normalized earnings. So in our view, with short-term multiples being less relevant, we believe that on mid-cycle earnings and discounting, a possible change in regulations on Senator Keg, as well as a potential upside remains limited. So if you look at just all the stocks that I've sort of covered right now, I guess our view is, the tier one banks, particularly Equity Bank, and then Safaricom.
This will do.
Given the fact that now the waiving fees have sort of been lifted, the waiving of transaction fees is now out of the picture.
Okay, fantastic. Thank you so much for that, Vinita. Now, I know you cover Sub-Saharan Africa. You're sitting out of Egypt. You are engaging with local as well as with foreign investors. Out of all the countries that you look at as a house, are investors then excited about Kenya? Are they going to make a good return in Kenya, or are there other markets out there, just not necessarily focusing on SSA, but also looking at frontier? Are there other markets that are considerably going to do well? In other words, Vinita, where does Kenya rank in all of your analysis for the year 2021? Back to you.
So in the frontier and emerging markets that we cover within our universe, if you compare just valuations and earning growth in specific markets, particularly in Asia, as well as in North Africa, and also if you're looking at GCC, for instance, I guess the ones that sort of stand out currently are Vietnam, because the macro environment is fairly stable and valuations are also looking fairly attractive. So I guess, if there are foreign players who are not particularly dedicated to Africa investing, then there are certain markets that are looking more attractive. But I guess, like I mentioned at the beginning of our discussion, Kenya is very well placed in terms of positioning. It's also very well placed in terms of valuations this year. If you look at, I'll share a chart with you, which will sort of give you an idea of where we stand currently. Just one moment.
Okay.
If you look at this chart,
all right,
on Kenya, this is basically a chart displaying the Kenya MSCI IMI.
Okay.
And if you look at the green band,
you'd need to share.
The Kenya
Vinita,
market is basically
Vinita?
Just sort of playing at around 9 times.
Sorry, Vinita, I can't see your screen. Please share your screen. Are you sharing it?
Yes, I am.
Okay.
Give me one moment. Let me share that with you again.
Thank you so much.
Okay.
But you can talk us through, not to worry, you can talk us through what your chart actually says. What's the conclusion from what you are looking at on your screen?
Yeah, so I guess, the one thing is that Kenya is very well placed when it's sort of goes down to the valuation right now. So valuations look very attractive, and there's definitely going to be a recovery in earnings growth across the board, particularly on the banks and the telco side. So if you sort of take those factors in mind, it's pretty well positioned for local and foreign flow. And another thing I guess I can reiterate on is the fact that locals have been positioned, or local positioning is sort of at a 10-year low. So there's definitely great room for expansion on that end. And this will be sort of determined by the sentiment towards the equity market, as well as, how fixed income yields sort of fare as well this year.
All right, fantastic. I don't know, Vinita, is there anything else that any investor looking at Kenya today must absolutely pay attention to that possibly we didn't capture in our conversation? You can tell me that, and then you can leave us with your parting words as concerns Kenya's investment case for the year 2021. Back to you, Vinita.
So I guess the factors to sort of keep in mind, like as we discussed earlier, is how things are faring on the macro front. So what is export growth looking like in these markets? What is the debt risks? What's the macro environment displayed like in these countries? So for Kenya in particular, these are factors that we believe that foreigners sort of also pay keen attention to, as well as locals. So these are factors that I would sort of keep an eye on in 2021, aside from how the market is priced. I guess my parting words are that 2021 is a recovery year. 2020 was sort of clouded by the COVID-19 pandemic, and now that the vaccines are basically quickly being distributed across the globe, we are sort of seeing these recoveries sort of ticking back in a lot of these frontier and emerging markets. Albeit we're likely to see that economic recovery will take a while. It may take up to 1 to 2 years, but it will definitely sort of complement how things are going to be faring in the equity markets, particularly in Kenya.
All right, fantastic. Thank you so much for your time and for joining us today. That was Vinita Kotedia, who is a Sub-Saharan Africa analyst with EFG Hermes. The title of the research report that was pitting Kenya against its peers in Sub-Saharan Africa, as well as foreign markets or frontier markets, if you like, was the fact that there has been a recovery, but the question is, how sustainable is this recovery in equities? EFG is telling us that there are some risks that abound, that is the macroeconomic risks regarding debt, but there could be some recovery points, and the key line to look out for is growth in the export markets. Over and above that, some stocks that could do well, Equity Bank looks like it could really show a good recovery from last year going into the next year. Safaricom, it's a neutral for now. East African Breweries is a neutral for now. If you are looking for the long term, there's certainly some good opportunities for you to get into. And yes, the recovery in the price is expected. You just need to be able to get in at the right time. What are your views on this particular subject? Are you concerned? Are you aggressive? Are you passive when it comes to investing in Kenya? And are you open to that opportunity? Most importantly, how can we help make this conversation and this discussion much easier for you so that you can make the right decision? 20146, that's our SMS line, or you could reach out to us, that's at Metropole TV on Instagram, Twitter or Facebook, or at Mbithe Mwema on LinkedIn, Instagram, Facebook or Twitter, and tell us what more you would like to know and how we can be able to facilitate this conversation. That's all from us this day. We hope to see you again, same time. Good day.